Today is Friday, February 25th, 2022. We got some good, exciting news for those people that still have not filed their taxes and is waiting to get across the finish line. We always looking for new and exciting and innovative things to, offer our customers here. Once again, we was talking about our, newly launched mobile app in the App Store, which was on the iOS, Android. Just type in MKG Tax Consultants, as well as our app in the Apple Store. If you type in the MKG Tax Consultants, one of the beautiful things that we offering is the financial education and the financial portfolio. We are working with a national lender, so now we're going to be able to offer our clients that file their taxes through our mobile app, down payment assistance tax loans. For the first time home buyers, you get a down payment through our down payment assistance program. What does that mean, and what does that, consist of? We're going to be working with, the largest home lender in America, utilizing our mobile app in the App Store, which is our tax filing app, that's live on the Apple and Google Play for download. You can skip the line and download our mobile app today and get started, with your tax return from the safety of your home. The largest possible tax refund or lowest tax liability with a money back, written guarantee, professionally prepared by MKG Tax Consultants. We're also offering a $50 cashback reward for downloading our mobile tax filing app. As more consumers rely on using their mobile phone devices nowadays, people are checking their phones 8 billion times a day, making, banking as a service and online mobile tax preparations a game changer. Especially now, with the interest rates and the home loans now that are, is now a right time to, buy a home. That's something that is, debatable or questionable. And so, we just want to make sure that we're getting the information out there, to those people that are, looking to file. But, you got to understand, a little bit more about what is MKG Enterprises Corp. Our app, is a state of the art and revolutionary app. We are a diversified financial service company that offers tax refund financial products primarily to consumers with limited access to consumer credits from banks, thrifts, credit cards, and lenders. As a lending mobile tax refund fintech, we provide tax advantage IRA accounts, crypto tax service, and digital wallets. Third-party digital currency wallets allows our users to pay or receive U.S. tax refunds in digital currencies such as Bitcoin, Ether, Pax Gold, USDC, USDP, and more, with settlements made in fiat or the currency of your choice. This is kind of, huge and big, what we're talking about here. And so, we want to make sure that everyone, is looking at the best options for them. Tax season comes once a year, and most individuals, are, racing to the, finish line and filing their taxes, online with TurboTax. But our company is licensed as a finance lender and broker by the California Department of Financial Protection and Innovation. Myself, I have passed a mortgage loan origination test as well as licensing. And so I'm waiting on, my license to be issued as a mortgage banker. And so, people will be able to work directly with me. And if, we were to, have an arrangement where you would file your taxes, of course, we would have to disclose an affiliated business arrangement. Me being, having an invested interest in the company. But, our CFL license is 60DBO 45224. It allows us to provide non-recourse tax refund loans primarily to customers with limited access to consumer credit from banks, thrifts, credit cards, and lenders with FICO score as low as 560. But, the minimum loan to qualify for a good interest rate on a home is about 620. The goal is to give underprivileged and underbanked families access to consumer credit to be able to affordably finance auto loans, finance solar systems, home improvements, make a down payment on a home, and are in need of a down payment assistance, investing, or pay off debt, leveraging their tax refund as collateral using our proprietary banking and finance app. This is a one time a year where we get the biggest payment from our tax refunds. And so, we want to be able to spend it wisely and using it. And, so having a down payment, making that, tax refund and using it as a down payment on a home is the best thing that you can do, for your family. and making sure that they're, ensuring they're, able to live and affordable, and be comfortable in life. Because if you don't, we do know one thing that, houses prices are not going down anytime soon. They're continuing to go up. And so, you want to keep that in mind, as getting these big refunds, especially now with the, when President Biden came into office and, it had this American Rescue Plan, and he changed the earned income tax credit to where, individuals now are starting to see, these huge refunds where if they, are getting, $10,000, $15,000, $20,000. So, the question is, should you rent or buy a home? We know that prices are surging in both cases, which makes it complicated. Fresno has had a 23.1 rent increase over the last 12 months, which is well above the state of California, 11.6%, and U.S. overall at 15.1% rent increase. The average one bedroom apartment now costs $1,150. The question is buying versus renting. There are limits to how much a landlord in California can increase rent. Every rental property that is not exempt from AB 1482 can only have an annual rent increase of 5% plus the annual consumer price index CPI percentage change. People who were renting in anticipation of buying a home are still renting because the housing prices have gone up so much. The houses they wanted to buy a year ago is 20% more than it was. And so, this program that we're launching, next month in March, it's going to give you, that option, that down payment assistance tax loan program, or that first time home buyers down payment assistance program, where you're going to be able to work, with the one of the largest home lenders in America that will be able to help you fulfill your dream of home ownership. There are some key points, you want to keep in mind, which is home prices are rising faster than rents, which is shrinking the affordability gap between being a homeowner and a tenant. Single family homes are less affordable than they have been in just over 3/4 of the U.S., the highest total in 13 years, according to a real estate data tracker. And so, getting in now, I mean, when you're getting those, big balloon tax refunds, use that money wisely, and, go to a financial service company that has expert staff and actually, licensed people, not just a tax preparer. We want to have some licensed lenders, a licensed tax preparers, and a licensed mortgage bankers, as well as, real estate agents that will, put your needs first and be in your best interest, and being able to help you save and reduce. And if your credit is not that good, we have programs, and we also work with credit repair companies that will be able to help you get to that, 560 or 620 credit score to get you qualified to where, you can get that pre-approved and pre-qualified letter to be able to go out and, start shopping for those homes. Work with a good mortgage loan officer that puts your best interests at heart. Real estate, all real estate is local. However, homeownership is more affordable than renting in suburban and rural areas, but it's cheaper to rent in big cities. Get pre-approved before home shopping. Find a good realtor that knows the local market, and you also have to file 2 years of tax return. And what's more better to be able to file your tax return using a mobile app, at the convenience of your home, where, the safety of your home, and, you don't have to take time off of work, and, you have someone that's going to be diligently and thoroughly, with your taxes and your finances. And that's only going to happen here at MKG Tax Consultants. We do this all year long. We're not just, here for, 1 year and, going to rush you out. We're going to make sure we take our time with your finances and go over everything and give you the best options, that you can have as a customer, because we know we want to earn your business. We want to keep your business, and we want to make sure, that you're going to be a client that's going to be returning back to us year over year over year. And you're going to be able to refer your family and friends and say, hey, I like that service that I got here at MKG Tax Consultants. They treated me real good. They made me feel warm. They made me feel welcome. And, they delivered. They under-promised and they over-delivered. And so keep that in mind, when you're online and, you're just filing taxes, and, don't just be, brain dead, tax file or bill pay. You want to be more strategic about, where your dollars are going. And also you can invest back into the community, into a locally owned company that is into the mortgage industry. We're also into taxes. We're into finances. We're also an insurance company. So we help you with your auto, your home, your life, your health, any of your mortgage insurance, your property insurance. We got you covered, from A to Z. We know that home prices are rising faster than the rents, and of course we know it's a shrinking the affordability gap. But so you got to make that, decision and choice on, what do you want to do, decide to keep renting, or do you want to move forward? So if you look at the data, all the data, is out there, and it's just telling us that home prices are rising faster than the rents, which is shrinking the affordability gap between a homeowner and a tenant. The median price single family homes are less affordable in just over 3/4 at the nation, the highest total in 13 years, according to ATTOM, ATTOM, a real estate data tracker. That's up 39% at the end of 2020. And right now, the interest rate is about 5.25. There's a little bit more than 5% right now. So rents are also up, especially for a single family home, which have been in the demand during the pandemic. Single family rents increased 10.9% in October of 2021 compared to the year earlier period, a sixth consecutive recording high according to CoreLogic. The fall is typically a slow season for housing, so which is more affordable owning or renting. As a tax expert, we recommend to use your tax refund as a down payment on a home, especially when you're getting that advanced child tax credit, that earned income credit, as well as the dependent care credit. Now that they increased the dependent care credit up to $8,000 per kid. So if you had 2 kids and you pay for daycare, that's $16,000. And if you add the $3,000, that's it, $19,000. If you add another $3,000, that's $22,000. And if you add all the other credits, that's a pretty significant refund, that you can use, as a down payment on a home. And, most people are going to say, well, what I'm going to do, I'm going to go out and buy a car. A car is going to increase your debt to income ratio. It's going to depreciate as soon as you drive off that lot. But if you put that money into a home, you're able to create generational wealth, pass that on to your family, pass that on to your kids, and as well as lock in that rate for 30 years that your rent's not going to increase. Your property tax might increase, your mortgage insurance and your PMI and things like that might increase, but that rent is going to always be consistent and constant. But remember the 4 C's of qualifying for a mortgage. Whether you are a first-time home buyer or are re-entering the housing market, qualifying for a mortgage can be intimidating. By learning what lenders look at when deciding whether to make a loan, you'll be more confident in navigating the mortgage application process. We're going to talk about the 4 C's of qualifying for a mortgage. The first C is credit. You got to have a 620 or higher FICO score, but you can go as low as a 560 or 580. You got to have also, the second thing is collateral. The third thing is going to be capacity. And then the fourth is going to be the cash to close and, the ability to repay. Standards may differ, from lender to lender, but there are 4 core components, the 4 C's that lenders will evaluate in determining whether they will make a loan: capacity, capital, collateral, and credit. And so, if your credit is a little, shabby and your credit is not that best, believe me, I had to, work my way up and clean up some things and pay off some debt, and sometimes, we get in a bad spot, where we have to dig ourselves out. And so, you want to look at, how you're going to strategize that. You're going to have a team around you and work with a competent and professional tax company. So, right now everything is more competitive. And so we're here at MKG Tax, like I said, we're covering, the 4 C's. We're not a credit repair company, but we have relationships with credit repair companies that will help you, get the credit up. As far as the capacity, that's going to be on some money management, some money saving techniques. We do use tools to help you manage your cash flow every month, your monthly budget. We have a free family monthly budget calculator that helps you, manage all your finances and know what your bills are. But getting to the capacity to pay back the loan, that's the most, important piece as well. Lenders look at your income, employment history, savings, and monthly debt payments and other financial obligations to make sure you have the means to comfortably take on a mortgage. One of the ways that lenders verify your income is by reviewing several years of your federal income tax returns and W-2s doing with current pay stubs. They evaluate your income based on the sources and types of income, salary, commission, or self-employed. If you're self-employed, you got to submit 2 years of tax returns, and then what they're going to do is they're going to divide that by 24 months and then give you an average, how long you've been receiving the income and whether it's been stable, how long that income is expected to continue into the future. So if you're getting overtime, you're getting like spousal support, alimony, things of that nature, bonuses. Lenders would also look at your recurring monthly debts or liabilities, such as a car payment. So that's why going out and buying a car is not a good thing for you if you're trying to buy a home. Student loans, you got to make sure you're current on those. Credit card payments, you want to also be utilizing your credit card payments under 30%. So if you had like a $1,000 credit card, you don't want to use 30% of that because it's going to lower your credit score, and your DTI is going to also increase. Personal loans, child support, alimony, other debts that you're obligated to pay. The capital. Lenders consider your readily available money and savings plus investment properties and other assets that you could access fairly quickly for cash. Also include your retirement. If you have a 401k or 403b, you want to also disclose that because, that can be liquid assets that you can use as a down payment as well. Having money saved or invested that you can easily convert to cash, known as cash reserves, proves that you can manage your finances and have funds in addition to your income to pay the mortgage. Cash reserves might include savings, money market funds, other investments that can be converted to cash, such as individual retirement accounts, IRAs, certificate of deposit, CDs, stock, bonds, and 401k accounts. Along with cash reserves, other acceptable sources of capital might include gifts from a family member, down payment or closing cost assistance program, which is what we're launching in March, which is our down payment assistance program for first-time home buyers, grants or matching fund programs, sweat equity. When you apply for a mortgage, the lenders may need to verify the sources of any large deposits in your bank account. So that means they're going to be seasoning that make sure that money is going to be seasoned in your bank account to ensure that they're coming from an allowable source. We got to make sure the money's not laundering, you're not committing mortgage fraud. This is that you obtained the money legally and that it was not loaned to you. Lenders may also look at the last 2 months of statements for your checking and savings account, money market accounts, or investment accounts to evaluate how much capital you have. Collateral. Lenders will consider the value of the property and other possessions that you've pledged as security against the loan. In the case of a mortgage, the collateral is the home you're buying. If you don't pay your mortgage, the mortgage company could take possession of your home, known as foreclosure. And we don't want that. We all want to make sure, we're, taking loans out that we're going to be able to pay and, be responsible. And, of course, it's good debt and it's going to build equity. To determine the fair market value of the home you would like to buy, during the home buying process, your lender will order an appraisal report of the property that compares it to similar homes in the neighborhood. Credit. Lenders check your credit score and history to assess your record of paying bills and other debts on time. Many mortgages also have minimum credit score requirements. In addition, your credit score could dictate the interest rate that you get and how much of the down payment will be required. Even if you are a renter and don't have plans to buy a home right now, it's a good idea to get smart about credit and know ways you can build and maintain a strong credit health. We also offer credit building plans where we have partnerships with Credit Strong, where you can open up a CD account and you can just start off with a minimum of $25 a month. We have another program where you also recommend self-help, where you can also take out a small loan of $25 a month and that reports to the bills, and that also helps you, build up that credit. Credit Strong and Credit Savings, take advantage of that and go online to visit that at mkgtaxconsultants.com/credit-strong-credit-savings. Credit Strong, Credit Savings, it can transform your life with strong credit and savings. It's not like taking out a credit card. This money that you have to pay every month is actually building towards an account that you're able to get back to you in return after the period ends. So Credit Strong helps you build credit as you grow savings, as your savings grow. Choose a plan that works for you. Build credit by saving each month. You can cancel at any time. You can make a payment and track your progress. They provide you with monthly FICO scores for free. Unlock your savings. Once your loan is repaid, your savings are returned to you. And so, those are the things that I, wanted to talk about today is our down payment assistance loans program, at MKG Tax Consultants, which is going to come from our corporate office, our corporate company, which is MKG Enterprises Corp. download our tax filing app in the Google Play and Apple Store. Look for the MKG Tax Consultants mobile app. And once again, we're here to, take